All right. Sorry I'm late. I had to take Sube out for dinner after that amazing earnings report for AMD. And if you did not see that earnings report, go check it out. That is by far one of the best beats, and guidance was raised for the next quarter. By far, we are looking forward to the best quarters we have ever seen in semiconductor stocks. And of course, NVIDIA stock has paved the way higher. But as we are experiencing this pullback, there is undoubtedly lots of bears and lots of noise, and tonight I'm going to simply give you an update of bull copium. Some of you bulls panic way too easily during pullbacks, and you have no idea what's going on during the pullback, and you start to believe the bears. So tonight is just going to be an episode dedicated to you bulls by yours truly, your bullish leader, and I'm going to show you how everything is going to be just fine. So first up, we're looking at the Dow Jones, and we do have 3 of the last 4 days making higher highs after we have pivoted off of a rising 20 daily moving average. We have all of the moving averages very aggressively sloping to the bullish direction. Price is above all of these moving averages, and we're knocking on the door of a bull breakout above 408. And then above that, we are looking for brand new all-time highs in the Dow Jones of 415 and then 420. So when you look at the Dow Jones and you look at this bullish price action, it is very difficult to say that the stock market is going through anything more than just a pullback when the Dow Jones is leading the way higher. And the Dow Jones is leading the way higher after we have seen a rotation out of the tech stocks. Now, the one thing you need to understand when we talk about a rotation out of the tech stocks is we're talking about the sector, which is defined by the ETF XLK. And when we look at XLK, you can see that we are dropping on decreasing volume, that while we are pulling back, volume is starting to drop, which is essentially just telling you that the people selling XLK or selling the tech stocks are very motivated to get out of these tech companies. And there's not some giant exodus or run for the door as people are trying to exit the stock market. This was 100% a rotation out of tech into other companies. And that is why when you look at something like the Russell 2000, which is defined by the ETF IWM, we are still knocking on the door of potentially brand new all-time highs as we're pushing here into the 220s. And the previous all-time high was back here in the 240s in 2021. And you can see from today's close, we are only about 8 to 9% away from an all-time high. So if I zoom in on IWM's daily price action, this looks like a giant bull flag that is developing just below the previous high of the 52-week high at 226. And just above that, we're looking for a price target at 228. And then we're looking for a push into the 240s. So if we look at the entire market and we look at IWM building out a daily bull flag just below resistance, and then we look at the Dow Jones that is knocking on the doorstep of a brand new all-time high, and you can see very quickly here, if I switch this to a monthly chart, it looks like on the monthly chart we're already at all-time highs because we've already been pushing that high. There is no way looking at the Dow Jones making all-time highs and on the daily chart knocking on the door of yet again another all-time high that you can say this is anything more than just a pullback within a bull market. Now, we can look at other sectors like XLF, which is the financial sector, and again, knocking on the doors of brand new all-time highs, maybe only one day removed from one at this point. And as we continue to push higher and see the financials pushing to all-time highs, how can you possibly say that this is not a bull market when the financial sector is making a brand new all-time high, or at least very close to making a brand new all-time high? We can also jump over to the industrials, and we are also looking at the possibility of a giant double bottom breakout. We've had the retest. So at this point, we're looking at the industrials breaking out, retesting that breakout, and now breaking out yet again. And if we zoom out, this looks like an even bigger double bottom that is likely going to push the industrials higher towards 131. So if we look at the financials about to make brand new all-time highs, we're looking at the industrials about to break to all-time highs, and then we jump over to XLV, which is the healthcare sector, and once more, even the healthcare sector is about to make brand new all-time highs. How are we possibly not in a bull market when everything is pushing higher to all-time highs except big tech companies? So once more, if we jump over to XLK, yes, if you are sitting here in tech companies and that is all you have been focused on, you think the market is in turmoil and you think the market is about to crash and you think the bulls are done for and they're absolutely toast. But all that you're living in is a tiny little piece of the entire stock market, and you are crying and kicking and screaming that the market is going lower and that the world is coming to an end, and you don't even know the half of it. So tonight is bull copium, and bull copium says we are going way higher. So if I jump over to SPY, We are simply looking at a mild pullback within a bull trend. And from the previous all-time high, we have only dropped about 4% from the all-time high. And that is a completely mild pullback within a bull market. So I don't want to hear it from the bears. I don't want to hear all of these narratives that we're crashing and there's hell rising with brimstone and fire. This is all crap. It's all noise. It is all completely there to scare you and try to make you feel the pain of the bears that have been shorting a very powerful bull market for the last 2 years. So I'm not buying into any of those narratives. I do not care that you think the market is going to crash or it's going way lower. There is so much objective evidence from these charts that we are pushing higher, and it is just the tech sector that is seeing some weakness as we see rotation. You need to block out all of that noise and you need to focus on these charts. And right now, if I look at SPY, it is always going to come down to this level at 542. Below 542, there is a very good chance we fill a gap at 537, but I'm not looking for a lot lower below that. Even if we break below 537 and come down to 531 from the all-time high, that is still only a 5 to 6% pullback. So you really need to focus up here. You really need to make sure you understand this is a bull market in the longer term that is going higher. And then you really need to focus in on AMD's earnings, because AMD just knocked earnings out of the park and raised guidance, and we're not even in the growth curve of that company of when they're really going to start making lots of money. And that is just a snippet of what is likely coming with the rest of these big tech earnings reports. So this is the time to be laser focused. This is the time to make sure you are dialed in and understanding this is a bull market likely going much higher. And during bull markets going much higher, you need to look at buying opportunities during pullbacks if you're a swing trader. If you're day trading, you're living in a whole different world of ups and downs. Every 5-minute candle probably matters to you. But in the longer term, if you're a swing trader, this is a bull market likely going a lot higher. And this is simply just a bump in the road before we go much higher. So right now on SPY, focus on 542. If you're really wanting confirmation we're getting bullish, you're waiting for a break above 548. And it is okay to stay risk off below 548. If you are a very risk off person and you do not like to take on risk, then just simply wait until SPY can break out and get back above 548. On the NASDAQ 100 triple Qs, we were down 1.37% today, and we did fully close that gap at 455, and we are looking for very strong support right at 453. So I'm going to delete that gap fill, and right now I'm just going to lower this arrow to 453. If we can stay above 453 and bounce and break back above 468, we have likely seen the bottom and we are starting to rally higher towards 480 and 493, and then above that, likely brand new all-time highs. So do not buy into the fear, manage risk as you are needing to, but as I've just showed you, it is mostly just a rotation out of tech. And once that rotation is completed, and as we get more big tech earnings and we clear the air that everything is just fine and we get through FOMC, I will not be surprised if the tech sector rallies right back to brand new all-time highs. So watch that level right there at 463 and 453, and if we break above 468, we're right back on that bull. Jumping over to the VIX, we were up 6.57% today, and just last night I told you I would not be surprised if we saw a little bit of a spike in the VIX, but from here I'm looking for the VIX to crush back down towards 13 as we see the bulls taking back control and pushing this market higher yet again. So right now, be very cautious getting bearish while the VIX is getting rejected from 18. We are likely about to see fear leaving this market as the bulls take back control and we start to rally, and I do think the VIX is crushing back down to 13. On Bitcoin, we're currently trading just above 66,000, and we are coming back down into this rising 20 daily moving average, and I do think Bitcoin is bullish as long as it can stay above 65,000. Above 65,000, I'm looking for a push to the top of the range at 71,000 and then a brand new all-time high right around 75,000. If we break below 65,000, it is completely fine to get risk off in Bitcoin. On NVIDIA stock, we were down 7.04% today, and NVIDIA is one of those market leaders that we've had since 2023 that has been leading the way higher. And I told you it was likely a blow off top with a very good possibility it was going through a deep correction. And at this point, we have fully come down from the previous all-time high all the way down about 27%. And that is definitely a deep correction. Now, if you just look at a normal market, 20% from all-time highs is a bear market, but this is one of those parabolic stocks with a blow off top. And there is no way a 26% correction is a bear market after you've gone up 400%. So right now on NVIDIA, I think watch this trend line right around 102. It is completely possible we push higher towards 122. But if we break below 102, then we could come down here to retest the previous all-time high breakout right around 95 to 96. So right now on NVIDIA, I would use the risk level at 102. Above it, we can push to 122. And below it, we're likely pushing lower towards 95 to 96. On Tesla stock, we were down 4.08% today, and we did close the gap at 222, and I still think there's a chance we close this gap down here at 213, but once we do that, I do think we're heading higher towards 289 to 300. So I think Tesla is as simple as staying bull above 212 to 213, and if we break below that support zone, it is completely fine to get risk off. And do keep in mind, looking at these Bollinger Bands, that would now require a break below the lower Bollinger Band, so it does look like we are starting to squeeze and getting ready to head higher. On Apple stock, we were up 0.26% today, and Apple is going to be one of those next big tech companies reporting earnings on Thursday after the bell, and I do think it is going to be very good, and I think we're going higher, which means you could be buying the dip above 216 to 218 for this price target at 232 and a brand new all-time high in the 240s. If we break down below 216, look for a push lower towards 212, and you could still be buying the dip above 212. But if we do break down below 212, then it is completely fine to get risk off and view Apple as a downtrend. So jumping back over to the S&P 500, this by far is a very bullish market. We have seen a lot of selling in big tech, which we have completely seen coming. I called about it for the sector rotation and the strength in the small caps and the Dow Jones ahead of time, but I do not expect this to last forever. Eventually, those big tech companies are going to find a bottom and find support and start rallying higher. And as we head into August and the rest of the summer, there is a very good chance we are going to see an everything rally as all stocks start rallying higher together and not just narrow market breadth from the top 7 or top 10 big tech companies. So this rotation is very likely coming to an end as we see the sellers volume dry up and big tech earnings are coming in better than expected. And then of course we will have FOMC, which is going to clear the air and lead to less uncertainty about the rates. Once all of the earnings have been reported and we get through FOMC, I will not be surprised if this market starts rallying higher towards new all-time highs and continue higher through the rest of the summer. So make sure you are not getting overly bearish. As always, even if you're a bull, you need to manage risk and you need to understand if we do continue lower where you are going to manage risk accordingly. But in the short term, I do think this sector rotation is coming to an end and these big tech companies are going to start rallying very soon. And that is going to favor the bulls for the rest of the summer, pushing us through August into the middle of September. So stay optimistic, follow price, and manage risk accordingly. And do not get overly bearish. As I've just showed you, a lot of the sectors and a lot of the indices are pushing for brand new all-time highs, and there's just no way that is a time to be bearish. If we see everything selling and everything starting to crash down together, we will definitely get bearish because we let the charts do all the talking. So let the price action do all the talking, have a trade plan prepared, and do not get emotional. Make sure price is making every decision within your trade plan. If you want access to all of my trade ideas, my intraday updates, and my technical analysis, that's going to be in my Stocks Channel Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.